One of the biggest mistakes I have personally made in my investing journey is not maintaining a proper asset allocation. Allow me 30 seconds of time so that you don't make that particular mistake. What you see on my screen is last 15 years calendar-wise returns of gold, real estate, Indian stock market, US stock market and debt. And you will note a very important pattern here that in different years, different asset classes become the number one from a returns perspective. For example, gold in 2010 and 11 was the best performing asset, number one asset. While the same gold in 13, 14, 15 was down massively. Now just imagine an investor who has only built portfolio in gold. In 13, 14, 15, they would be crying out badly. Why? Because they will say that my gold portfolio is not performing. This is the biggest mistake investors do where they put everything, a lot of their money into one single asset. I will never do this mistake again. I would maintain a proper asset allocation. In fact, just a few days back, I wrote a detailed note on my YouTube community speaking about why in 2026, I would be moving personally my 15 to 20% of portfolio into global markets. This is extremely important point that you need to understand, which is asset allocation. Now, which markets would I be considering for my investments? Right now, I'm doing a lot of research. I'm looking at US stock market. I'm looking at Greater China stock market. I'm looking at Thailand, for example. There are a lot of global opportunities. Right now I'm studying, and slowly as and when the opportunities emerge in 2026, I'm likely to move 15 to 20% of my portfolio into global markets. Again, it's not a push for you to do it, but hopefully you understand this important point. Now, if you want to join my YouTube community, you're most welcome to join this. Simply go to my channel, find the join button and be my guest. A lot of people have been learning there with me and been part of my investment journey. With that, now coming back to this video, you may ask a question to me that, Rahul, how do we invest in global markets? What are our options? So broadly, there are two options. Option number one is that you invest in Indian mutual funds. And these mutual funds on your behalf will invest in global markets. It's a very straightforward, simple process. The way you do your SIPs in Indian mutual funds for Indian stock market, you can do very similar exercise here with Indian mutual funds that invest in the global market. That's option number one. Option number two is that you directly invest in global stocks using various brokers, platforms, apps, etc. Again, I've spoken about some of those on my channel. But in this video, what I want to do is keep it fairly simple and go with option one and explain to you 4 to 5 Indian mutual funds that are investing in global markets so that you don't need to worry about, which stocks to buy, which platform to use. Of course, if you are an advanced investor, definitely go and explore that option. But here in this video, I'd keep things very simple. So the first type of mutual funds that I want you to understand is the mutual funds that are investing in Greater China theme. Now, what is this Greater China theme? Greater China is a 3-in-1 combo. What is 3-in-1? You got mainland China, you got Hong Kong, and you've got Taiwan. So these three stock markets, if you want to operate or invest in, then Greater China is the theme that you need to be aware of. Allow me 1 to 2 minutes of time and let me give you some broader perspective first. So in China, there are three main exchanges. Which are those exchanges? Shanghai Exchange, Shenzhen, and Beijing. These are the three main exchanges. There are various indices and you can see those indices name coming up on your screen. The one that I really want you to focus on or start tracking from today onwards is CSI 300 index. This is a very important index. Why? Because it represents 300 top companies from Shanghai as well as Shenzhen Stock Exchange, giving you the biggest or the mighty Chinese companies in this particular index. Please start tracking this index and I'll tell you the relevance of that index just in a minute's time. But coming to Hong Kong Stock Exchange, you have two index that I think you should start tracking. Hang Seng Index, which is tracking around 82 stocks from Hong Kong Stock Exchange, and second one is Hang Seng Tech Index that has about 30 tech stocks. The third one, which is the Taiwan has got an index called TAIEX, which has got around 1000 stocks. Again, you can also track that one. But now coming back to the point that which are the mutual funds that allows you to invest in Greater China theme. So I found as of now two Indian mutual funds. One is Axis Greater China Equity Fund of Fund and second is Edelweiss Greater China Fund Offshore Fund. These are not recommendations. My intent is for you to learn about these two mutual funds. At the time of recording this video, I think Edelweiss Greater China Equity Offshore Fund is not taking fresh investments. Axis is taking as of now. So I'm going to explain to you using Axis as an example here. So first of all, let's look at the past returns. What you note here, this fund started in February 2021. So it's about to complete 5 years, but not yet completed 5 years. So there is no data for 5 years returns. 3 years annual returns have been around 22.78%. Right? Last 1 year returns have been very, very good. In fact, 36.54%. But if you look at since inception, this fund has only managed to give 1.04% annual returns. Why is the case that all of a sudden last 1 year it is giving high returns versus the inception, which is 2021, only 1.04% return? For that, you need to understand CSI 300 index movement. Again, as I said, this index represents 300 top Chinese companies from Shanghai as well as Shenzhen Stock Exchange. Look at this and you will see that in 21-22 it came down massively and now it is on the path of recovery in 2025. Therefore, in 21-22 there was downtime and then now it is going back up, and that's why you see good returns in the past 1 year. The reason I've shared this data with you is for you to understand one thing. If you want to invest in global funds, please do not have a time horizon of 6 months or 1 year. It is not a quick money making machine. These are volatile markets. Have a time horizon of, I would say, at least 5 years, and think of this as a long-term wealth opportunities, not just short-term quick money-making themes. I hope that point is very, very clear. Now comes the question, where is this fund investing? So majority of Indian mutual funds, what they do is that they collect the money from Indian investors. For example, Axis is collecting money from Indian investors, which is a domestic fund. Then they would invest in a fund which is a Chinese fund. For example, Schroders ISF Greater China Fund. Therefore, Axis Greater China Equity Fund of Fund is not directly picking stocks. It's an important point you need to understand. Here, Schroders ISF Greater China, that fund manager is going and picking the stocks from Chinese stock market, right? That's why these are called feeder funds or fund of fund or offshore funds, things like that. Now, coming back to where is then Schroders ISF Greater China is investing in China. So here is some allocation that you need to know. As of August 2025, 68% of their assets are in Chinese stock market and remaining 6% Hong Kong and 25% in Taiwan. So a very good diversification. Within 68% of Chinese, they are investing in Chinese offshore 13.6%, Chinese Hong Kong listed companies 51.5%, and China US listed companies 2.7%. So basically it is covering a lot of grounds for you while you are not worrying about which stocks they are picking. But if you want to know which stocks they are having right now, for example, August 2025, you can see the list of top 10 stocks here. TSMC, which is one of the largest chip making company in Taiwan, that has got the huge 9.7% allocation. And then you can see other companies like Tencent, Alibaba Group is there. A lot of other Chinese companies are there. Now the question is that, Rahul, what are the opportunities in Chinese companies? Should we invest them or not? It is totally your call. What you note here is, read this out. One of the biggest problem in Chinese market in the past has been around the economy has been very, very dependent on real estate. But in the last couple of years, you would note that Chinese government is trying to move away slowly, gradually, and reduce its dependency from real estate and trying to move into tech, for example, AI companies, etc. So that's a good move from an investor's perspective. There is likely to be better diversification. Again, you can read through these 5 points and it will give you a summary view of why Chinese stock market could be considered for investment. Again, not a recommendation here, but of course, every investment comes with a risk. So what are the risks? Let me give you a couple of risks here. Again, there's a long list here in terms of risks. Not all these risks are issues at the minute, but these could become issue in future. That's the entire meaning of risks. For example, there might be a risk of higher volatility. I talked about that. I showed you that never invest in these funds for 6 months or 1 year. Have a 5 years of time horizon. And the second point, for example, here could be that, what about the currency risk? Yes, of course, if tomorrow Chinese currency is devaluing for whatever reasons, there could be a challenge for this particular fund. But actually on the currency, I've been reading about what's happening in BRICS, and BRICS very recently, I don't know whether you've read that news or not. BRICS have recently launched a payment system which allows more than 180 countries to trade in Chinese currency. So that's a very, very good move. What I am seeing personally is that the Chinese currency is getting stronger day by day. But again, that risk remains here from a currency fluctuations perspective. In the short term, it might come down, etc. So those are the risks that you need to keep in mind. In my view, if you keep a longer time horizon of 5 years and not look at this only for 6 months and 1 year, then that makes a lot of sense in my view. Let's go to second mutual fund now. And before I go to second mutual fund, so far if you're liking this video, request you to hit the like button. Let me know in the comments a simple thank you. It motivates me to bring such content for you at zero cost. The number 2 mutual fund that I want you to learn about is HSBC's Global Emerging Market Fund. Now, if you want to go and invest in global emerging market themes, then this fund is one option in my view. Again, not a recommendation here. This fund is a very old fund, started back in 2008. And if I talk about this fund's country allocation, have a look at my screen. What you see here is that mainland China, 31% investment, Taiwan, 17%, India, 13%, Korea, 12%, South Africa, 8%, Brazil, 5%. What you see the long list here is that all these are emerging economies, and this fund is taking a bet on these emerging economies. Now, if I talk about the type of companies here, have a look at my screen. You see the portfolio here. TSMC at number 1, 9.8%, and you see a lot of diverse companies here. For example, from Korea, it has got Samsung. For example, from China, you've got Xiaomi. For example, from India, it has got HDFC Bank, Reliance Industries. Very, very diversified list of companies from global emerging. You can see sector allocation also, you can see it's heavy on tech at the minute, IT 32%, financials 21%, discretionary, consumer discretionary around 15%. So this is a theme that is truly giving you global exposure if you want to go for global emerging theme. Now, what sort of returns it has generated? In fact, let me show you the data, and here we can see lump sum data as well as SIP data. Let me first speak about lump sum data. Lump sum data, direct plan of this mutual fund in the last 1 year has given 24% returns. Last 3 years, it has given around 18% annual returns. Last 5 years, 9%. Last 10 years, 10%, right? So if you look at the long-term view, I think it's done fairly well, right? Now, if you look at the SIP performance here, if you look at the scheme return here, 48% in last 1 year, 3 years, 23%, 5 years, 12%, and since inception, long time, if you go back to 2008, 9.27%, right? Which index is it giving you, or the benchmark index here is MSCI Emerging Market Index. So this is the index you need to start tracking. And if I just talk about this index's valuation as of now, PE forward is only 13.46. In my view, valuations wise, it's not hugely overvalued at the minute. Of course, there is a rally in the last 1 year or so that we saw in that particular fund, but that's the index you need to track if you want to get into a bit more details. Now, this fund as of now is taking lump sum as well as SIP investments. Again, not a recommendation. The reason I'm telling you this is that a lot of Indian mutual funds have stopped taking fresh investments for their global portfolios. There are limits imposed by RBI that there is an industry-wide limit, then there is an AMC-wide limit, there is a limit on ETFs, and those limits have already reached in a lot of AMC's cases. Therefore, a lot of mutual funds have stopped taking fresh investments. So in this video, what I've done is I've picked up those mutual funds, and those ones that I'm going through right now are the ones that are still taking fresh investments because maybe their AMC wide limit has not yet reached. So go and explore this one. Not a recommendation. It is entirely up to you whether you are wanting to take bets in the global emerging markets or not. But if you're liking this video, I request you to hit the like button. Let me now move to mutual fund number 3. The third type of mutual funds that are available is US oriented and US technology oriented funds. For example, Edelweiss US Technology Equity Fund of Fund. Now, if I talk about this fund, it is investing around 83% in United States as of now, Taiwan 3.27%, Canada, Singapore, Sweden, Cayman Island, Luxembourg, Brazil. It is giving you so many markets out there wherever there are technology stocks. Now, if I talk about some of those stocks here, you can see on my screen their top 30 holdings, likes of Nvidia from US, Oracle, for example, Meta, Tesla, TSMC from Taiwan, for example, and you have other companies here, for example, Alibaba from China, right? So you have a mix of a lot of tech companies coming from various countries. That's the beauty of this particular mutual fund. If you look at the sector allocation, you can see capital equipment 47%, finance is there, consumer goods is there, but it is towards heavily on tech side. Now, coming back to the past track records of this particular mutual fund, this is the regular plan. I would always say that go with a direct plan so that you pay less expense ratio, but I could not find the data for the direct one. Therefore, I'm presenting you regular one. Direct plan should ideally give you slightly more than regular. So you can add some bits into this particular return. Anyways, coming back to last 1 years of returns, 45% as of, if you see this data is as of October 2025, last 3 years, 38%, last 5 years, 19%, since inception, 24% returns, right? This has given far better returns. Why? Mainly because US market has been doing well. Tech companies have been doing really, really well in the last few years. And therefore, this has generated far better returns than other mutual funds. If you look at SIP performance here, last 1 year, 56%, last 3 years, 38%, last 5 years, 25%, and since inception, 24%. So these are some mind-boggling returns that this fund has generated. However, past returns do not guarantee future returns. Please make sure you're clear with that. Never put all of your money in one go in any mutual funds. Do it in a staggered manner. Do it in a SIP manner. Think long term, put it for long term. Don't think it only for 6 months. I can tell you from my experiences, whenever you put only short term money, you're likely to lose money. You might not gain money. So please make sure you have a long term horizon. Just don't invest, let's say, to make a quick money. That is the constant theme I'll continue to remind you, because I don't want you to only think about 6 months or 1 year. Then equity is not for you. Then maybe FDs is a better option, or corporate bonds is a better option. So this is the third mutual fund, which is Edelweiss US Technology Equity Fund of Fund. At the time of recording this video, this fund is taking fresh investments. Again, not a recommendation, not a buy push for you to take investments in these funds, but at least you know these options. You can go and explore these further. Now comes the fourth type of mutual fund, which is truly global. For example, Sundaram Global Brand Theme Equity Active Fund of Fund. Now this one is looking at top brands globally. So if you read this investment process, you would know that they're picking total 30 brands across the globe, and that's what is in their portfolio. Their theme is to pick global brands. Okay, let me give you examples of these. For example, Alphabet is there, which is your Google, Microsoft, JP Morgan, which is the global brand, Amazon, Coca-Cola, Samsung, Pepsi. All of these are global brands. So they invest in global brands. And as of October 2025, the sector profile is IT around 31%, consumer discretionary 22%, financials 14%. I think it's quite a diversified fund in my view. Country-wise, if you look at the breakdown here, US is 66%, Germany 10%, France 7.7%, Japan 5.5%, Korea 4.6%, and then some cash, of course. So it is truly global, in the sense that it is giving you multi-country exposure, and it is only picking the top brands, the brands that has a lot of brand reputation, as we have seen in the names here. What about the returns? Past returns, again, these are indications. These are not future returns. These are past returns. Last 1 year, 26.9%. Last 3 years, 22.3%. These are all annual returns, by the way. Last 5 years, 16%. Since inception, 9% returns. You can look at the SIP, how the SIP would have changed your amounts here. Again, not a recommendation here that you go and invest in this particular fund, but this fund is taking fresh investments at the time of recording this video. Go and explore, read about this fund. In fact, go and read about all the 4 funds that I've talked about. First one was around Greater China theme. Second one was around global emerging themes. Third one was around US technology funds. And number 4th was around global brands. I've given you different flavors in this particular video. You're not going to find this content anywhere on YouTube. And if you're liking this sort of content, please subscribe. That gives me huge motivation. I mean, that's the only perks I get. I get huge motivation because your subscriptions, your liking on this video, your comments, just a simple thank you does a job for me. A lot of motivation for me to come up with such content for you. Again, none of these funds were recommendations. Although I'm a SEBI registered research analyst, please do not take any of these recommendations. I share my research with you. As I said in the beginning of the video, I'm going to start moving some of my money into global markets, either using mutual funds or my direct investments. Therefore, I would highly request you to also learn about global expansion, learn about asset allocation. On that note, I'm going to see you in my next video. Until then, keep rocking.